welcome to this week's episode of Your Stock Request for the 22nd of February. Every week I'll look at the charts for a few different stocks as requested by you. Just email us at mail@fairmontequities.com. There's a limit of one per person and no guarantee that your stock will be covered, depending on the demand. Also, just make sure you share the video on social media. The more requests we get, the more chance we have of uncovering a great opportunity. Also, just take note of our disclaimer. Any advice is general only. We start off with Origin Energy. So this is one that we've been positive on for a while. You can see on this daily chart for the last several months, it's been doing pretty well. Obviously been sold off earlier this year, but has managed to recover in the last couple of weeks on fairly decent volume. We'll just move back to a weekly chart. So I think the last time I mentioned it was during this consolidation. We noticed the breakout, so it had a good run, and obviously what it's done is it's come back in three waves to sit on top of this high. So far it's setting itself up for a decent move. We've so far seen a fairly decent recovery from those the low $8 level. The pullback was pretty sharp. Obviously the market had a bit of a tumble here in this week. I'll just zoom in a bit more. So obviously during this red candle was when the markets were sold off, but given the sharpness here, maybe we don't just break to a new high straight away. Maybe we do use up a little bit more time, but the end result is, Origin Energy is looking fairly bullish here and can head to higher levels. I mean, if we pull up our sort of Fibonacci tool, we can see that $10 will be not only as a round number, but as the 61.8% retracement. That'll be a bit of resistance, but clearly if we look beyond that, we can see that near $12 is another resistance line. So it'll take a while to get there, but at the moment it looks like it's on course to do so. The next one we have is ORA. So this is one that we've been in for clients for a while. I've liked the way this one has traded. Basically been trending up ever since listing a few years ago. So it trends up, consolidates, breaks higher, consolidates again, another break. Here's a shorter term consolidation. We could see that this consolidation has sat on top of this high on a weekly basis. And if I zoom in here, we could see that it's trying to break out. So maybe today or tomorrow, ORA will be trading at an all-time high. So breaking out in the direction of the trend, that's a good thing. It reported well a couple of weeks ago. So I can see further buying, and I can see this thing pushing through at least 350 over the next couple of weeks. So IPH, this is a weekly chart, obviously not looking very good. We did cover this one, I think, around here in October, where it obviously started to look encouraging. It sort of bottomed out and rallied, and we had an initial target of $6, where we had clients in it who got out. Not because I predicted it to come back under $4. To be honest, up until the last couple of weeks, it was still looking okay. We had this big move up here, bit of a consolidation against that spike up, so a bit of a flag. But there's no certainties with these patterns, of course. And unfortunately for whoever's holding IPH, it's taken the smaller probability route, and that's to break to the downside here instead of to the upside. So it's fallen all the way under $4 on volume. So medium to longer term, it doesn't look good. Shorter term, we'll move to a daily chart here. Clearly very oversold. Could stage a bit of a bounce back up towards $4. So that's what I'd be looking at as an exit point. Henderson. Overall, this one still looks good. I know it's been sold off fairly sharply here. Again, the market was sold off fairly sharply. There was some obvious resistance here. I say obvious just without Fibonacci tools. So around that 61.8% level. We can see previously there's been a bit of support there. So it's turned into a bit of resistance and the shares duly fell back. It's encouraging the fact that it has retraced that much. So if we're looking at the fall here, it's retraced, nearly 2/3 of that, which is a positive. It means that now that it's easing back, at some point I think it'll go on to cover the rest of it. So if the shares could only retrace that sort of 38% and then really get sold off, that would be a sign of weakness. But the fact that it's managed to recover that much ground is a positive. So now it's just a case of potentially short-term weakness. Maybe it'll use up a bit more time, but ultimately I think it'll go higher. So if we just look at the recent move up, I'll just zoom in a bit. So it's sort of fallen through that 38.2, got close to the 50% and bounced. Maybe it'll just come back again a little bit more, but if you like the stock, I'd be happy to buy it around these levels. I think that, as I said, it'll head back higher again, and weakness down to this zone is a buying opportunity. The next one we have is Metals X, MLX. This is a weekly chart. So a couple of, I guess, obvious observations. Sharp sell-off, not necessarily a good sign, but I mean the stock did it here and managed to bounce pretty well. Sharp sell-off, we could see here on the weekly chart there is some support at this level. So for 3 weeks now we're seeing some buying coming in the lower 80-cent region, which is good. It's a shame that it's taken out this low. Obviously when the market was sold off, it sort of breached that previous low, but managed to quickly recover. This week it's come back again, but as I said, it's finding a bit of support there. So I think there's still potential for this to rally from this point. If we sort of do a bit of a trend line under here, it's sort of thereabouts, respecting that line. So I'd be happy to hold it, see what it does. If it sort of struggles, if we go into next week and it's struggling, I'd be a bit concerned. But at the moment, it looks like it has potential to bounce and resume that upwards trend. Finally, we have Japara Healthcare. Chart's a bit messy, so there's nothing too obvious I can say about it. Bit of a double low, so we've got a low point here that seems to have tested this low. So it's made a higher low. We're looking for a higher high, not quite this. If we're looking at the shadows of the candle, we can see that it fell short. Seems to have stabilized, and so far this week it's looking positive. So this is a daily chart. We could see that it's had a fairly decent move the last few days, which is encouraging. So if I like the company, I don't have a view on the company fundamentals, but if I did and they were positive, I'd be happy to hold it, just see what it does. I think if it starts failing under here, I'd just be worried it's going to go and make a lower low. But at the moment, I'd be encouraged to hold it. And I think in terms of whether you'd want to buy it, I'd want to see this zone breached first. I'd want to see it really get through here. It looks like actually this 240 region, it's a little peak here, a little low there. So that 240 region is going to be a lot of resistance. I think if it clears all of that, you can have a bit of a run up in towards $3, and that will be a lower risk trade. But at the moment, it'd be too risky to be buying it, hoping it'll go through here. Well, that's it for today. As always, share this with your friends, and if you have a request, send it through. We'll be back next week.